we're probably going to see prices drift down a bit for some period of time. So, and the reason for that is normally when you have a big correction in interest rates like we've seen, logically property value should correct downwards because the cost of financing is such an important variable in that. But at the same time, people anchor to their price and they will not want to sell their home for less than it was worth last year unless they have to. So you get most people just sitting it out if they can. And you've got lots of homes that are owned mortgage free. You've got
so like 1/3 of the stock. There's only 1/3 of the stock that actually has a mortgage on it.
Yeah,
is that right?
Exactly.
Yeah.
So they don't have to sell. Everyone else is just going to sort of sit and wait and see. At the same time, from an investor's point of view, rents are going up, which helps. And you tend not to get, like, unless you get like major job losses that are going to force people's hands, you tend not to get a collapse. So I think it's less likely you're going to have a sudden collapse rather than you just have prices drift down a little bit. In real terms, of course, after accounting for inflation, they're already coming down quite a lot faster than that because inflation's been really high, even if property prices just stay still. So relative to earnings, relative to the value of the pound and everything, they've actually fallen quite a lot already. So if they just drift down for another 18 months, that's quite a big correction.
I love that video you did, and we spoke about it at the time because I saw in the comments people just didn't agree with you. And nominal prices, as in the on paper value, is important because that's what you borrow against. That's what you bid for. That's how much your deposit is. But the inflation point is really important. And just to clarify, so people get the point, if you've got £300,000 sat in a bank account and inflation is 10%, you're losing 30 grand a year in spending power. It's the exact same for a home because the home is essentially a savings account, isn't it? If you've got £300,000 worth of equity or value in the home, if inflation is 10% and the price stays the same, you've lost 30 grand in spending power there. So you're basically saying, add that real impact, the inflation adjusted impact plus the nominal, and you might actually have a 30% crash in real terms already.
That's like a professional opinion on it. Do you think the average investor or home buyer is thinking like that, or they're thinking no, it's a buyer's market, or they're thinking it's a seller's market?
Professionals are thinking like that. You're the only person in the country to make a video on it.
Yeah, so I don't know. It just seems obvious to me because of the way we think about it. But then that doesn't mean that no one else is thinking about it. Your homeowner isn't thinking about it that way. And it is still a buyer's market. You still wouldn't want to be selling your house in this market regardless, because again, the only people who are selling now are because they have to.
Rob Dix is the only property channel I watch. Don't miss out on his insights on property investing by watching the whole interview right here.